Hi there, and welcome back to another exciting episode of Finance Success. My name is John, and today I'm going to be going on to further my discussion on how we pay our national debt. So in my last video, I showed you the main way that we pay taxes to get rid of this burden that we have over us in the U.S. of $27 trillion, right around there. And it doesn't look like it's slowing down anytime soon. So today, I'm going to be explaining the hidden tax that not everyone knows about. You might have heard about it, but you haven't really thought in depth. So, let me begin. With the election right around the corner, we see presidential candidates like Biden trying to increase the taxes on the rich, and then Trump across the board trying to cut taxes down for all. And you might wonder, well, how does Trump get away with something like this? Because in roughly 2017, 2018, Trump changed the tax code to basically make it cheaper for everyone across the board, for the most part, with some exceptions here and there. And pretty much all tax brackets were lowered. And you might wonder, how is that possible if we have to pay this whole tax burden? And I talked about how the interest on our debt is getting to a point where we're not even going to be able to pay down the interest, let alone the debt. So today I'm going to be talking about how Trump does this with a hidden tax. So, let me begin. The main way they do this is by increasing monetary supply, which basically means making your dollar worth less. So if they have more dollars in circulations, your tax burden goes down. And this is why in my real estate video, I talked about how the U.S. increasing their inflation actually helps your debt. So they do this through some means, and one of the means is obviously just printing more dollars. Because after all, if we have more dollars in circulation, then the demand for those dollars is always going to be the same, and people aren't going to really want it as much. I should say the demand would be lower because there's more of a supply, and supply has to meet demand. If there's more supply, then the demand will be lower because it's a less safe asset. Who wants to hold something that depreciates over 2% a year, every year, compounding? And this is why we see things like the dollar or the wages across the country increasing, and how my grandma used to get paid $1.25 an hour, and now that's not even close to minimum wage, which is above $7. And this is how they do it. The main one's through physical printing, but everyone knows this. Everyone, for the most part, knows about inflation and how the U.S. printing more dollars is bad. So how can they cover this up? Well, the Federal Reserve basically just increases the money supply through a different measure. What they do is, I think, right around the time of COVID, what the Federal Reserve did was they created this fake asset, a coin that's worth $1 trillion, and basically what they did was they invented this coin and they said it's worth $1 trillion, and then they just put it on their balance sheet so that way they could credit more money into the economy than what's actually there. And we've seen how high it goes. It just keeps going up and up. So although Trump may have reduced taxes, he might have increased it in another area. So you just gotta understand both sides of it and how these people manipulate the dollar in order to make themselves look better. Now, I'm not a proponent for Trump and I'm not against Trump. I'm just telling you the facts. And the third way, and I forgot to mention, with this increase of over $3 trillion just injected into the economy through the Fed, we see many of these memes with the Burr meme. And this is the most common one among the Stonks fan. And they basically made a meme because of how much money is just being printed. But lastly, the one that really not many people know about is what's called fractional reserve banking. And if you don't know what fractional reserve banking is, I'm going to make a video in the future on what it is. But basically, it's where banks are allowed to just make fake money out of thin air. They don't even need special permission, they just do it. And they recently set the reserve requirements to 0, effective March 26th. So now Banks don't even need to hold your dollar. And this just increases the money supply. It can go up infinitely from here because there's nothing holding them back. And that is so freaking scary. And so I'm going to put a video down below if you want to know what it is exactly. But that's basically what it is. They're lending out more money than what's actually there. So now, what can you do against this? You see how they use inflation to help them and how they help reduce the national burden. Well, one way you could do is you could always ask for every year an increase in your wage of inflation. And I remember, here's a story. I remember when I worked at McDonald's, I would have to beg for a 25-cent raise. And then when I got down to think about it, because I was making roughly $10 an hour, a little bit less. But when I started to think about it, I'm not even keeping up with inflation, really. I'm right above it. And when I was getting my 15-cent raises for being a good employee, I wasn't keeping up. I was making less than I did last year, and that's just unfair. So the people that really benefit from something like printing more money are the business owners. The people not holding the physical dollar, because that gets depreciated. And the people working for a wage and a salary, they're the ones really getting screwed over, not the business owners, not the people that own the assets. Because you could do what Robert Kiyosaki says. Saving money, are you nuts? Why save money when quantitative easing by the Fed, counterfeiting, is printing trillions of fake dollars, 82 billion a month, 125 billion a day? Why save when zero interest policy pays losers zero? Save gold, God's money, or Bitcoin's people's money. Now, there's many ways you could combat inflation. One way is to do what a lot of people did, was just invest into assets that go up. So generally, stocks are a little bit better inflation resistant because, after all, it's just a business and they could increase what they charge people because, the dollar is just not what it used to be. So they could charge more for their stuff. But you also have to remember, most of these stocks, like the S&P, is based off of earnings. And right now, their earnings and the price to the earnings is way out of whack. 30 PE right now. And that's just absolutely absurd. Throughout history, it's generally been below 20. So right now, we're in bubble territory. So maybe steer clear of stocks. What else can you buy? You could buy real estate. Real estate is generally immune to inflation for the most part. It's got its ups and downs from other factors that could be indirectly caused by inflation, but generally a house is always going to be worth a house. And that's why it doesn't really matter what inflation does. Real estate is going to go up generally if there's more dollars out there. So you could do it in real estate, but you might not have enough money for real estate. So I would also recommend you could do a REIT, which is a real estate investment trust, I believe. And they're basically exchange-traded funds, kind of like a stock where you could buy it. And it's basically, it just pays you dividends out of how much money they made off rental properties and such. Another thing you could do is buy gold. Gold has been used for thousands of years. And whenever there's high inflation, people generally flock to gold. And that's why we've seen gold over the past year already go up by 8%. No, not 8%, by a lot, 50%. And so generally people go into, oh, my bad, that's silver. But generally people flock to hard metals during periods of high inflation. And this is why we're seeing gold, like a month ago, hitting all-time highs. Now, if you don't want to buy gold, my last recommendation is buy Bitcoin. It is the hardest monetary asset ever created. There could only be 21 million Bitcoins ever created. And the people that are behind Bitcoin, it really is people's money because the people control it. The people control the supply. I don't have to agree with what the Federal Reserve is doing. I don't have to agree with what the banks are doing for their fractional reserve banking. I don't have to agree with how the US government prints physical dollars into circulation. I don't have to. I just have to invest in something like a hard asset like Bitcoin, gold, or even silver. Now, so what can you do? I already told you how you could hedge against it, but I mean, you could vote for a president that's opposed to all these ways of increasing our tax burden. Or, I mean, some of the things the Federal Reserve and banks are doing is just flat out kind of shady. Not everyone knows how the system works, but by better understanding the system, you could better be advantaged to play the game and get ahead. Because after all, you don't want to be working like I was at McDonald's for making a possibility of 25 cents a year, which just keeps up with inflation. What you want to be in is careers that have no cap, like a real estate agent, where it's all dependent on how much you sell. Salespeople are generally immune to it. Inflation. Who else? Business owners, like I said, they're immune to it. You don't want to be tied down to careers like this. And you don't want to keep your money in savings accounts. You want to keep it in assets that go up. And this is how the rich keep getting richer and the poor keep getting poorer. Not even the poor getting poorer, the uneducated getting poorer. So by learning this video, by learning something new, maybe it'll help you in the long run. And that is why I made this video. This is the hidden tax that not everyone knows about. So with that, peace out, and I'll see you on the next video.